Hi guys, it's Ryan here from leprivatebanker.com. I was going to do a quick recap on the day today, of what I saw and how I approached today. So what we saw today was a gap up open. I mean, it was only a slight gap up from yesterday's trading range, and we basically see we came back into last week's value area on the overnight session. We started to trade and hold this, and we came off and we tested this this previous week's mean. And I mean, I was just a little bit just too soon on this trade. I mean, I basically just sold the market in just right off the open. I mean, we basically opened up on top of the moving averages, and the moving averages were higher at this point, so the 5 exponential and the 10 exponential we just opened up on top of it. So we're either going to auction away from it, or we're going to obviously auction through it and down as the average prices have been falling. And so I basically, like I said, just sold the market with looking for acceptance back into the previous day's range, looking for a reversion to the mean and a possible test of the other side of the trading range. Obviously, from what I see and what I said yesterday, I've been expecting possibly for this market to come down and fill this lower distribution on the year, possibly. So so I've been leaning to the short side. So that's what I did today, is I tried to sell the market off the open. So I sold the market off the open. I got filled into the 90s, and this worked out beautifully. I mean, we auctioned down into the. Let me just open this up a bit. Hold on. So we auctioned down, and I managed to get my first scale and my second scale into the initial balance low, and what we saw was just a very, very quick rejection. It's like a knee-jerk reaction. We had news out at 8:45, and we had 10, sorry, and we had news at 10 o'clock. And what they did is they just basically bought whatever happened. We just see buyers in the market. We came up and we tested this first IB extension. So as soon as we see this quick rejection, I just got out of this trade. And I mean, in hindsight, I mean, what I should have been doing is just continuing to lean off the higher confluence into the 106.05s, but I just kind of got chopped up in this scenario. I mean, what kind of made me change my bias on this after this happened was the fact that we attempted to come back into the previous day's range 3 or 4 times, and every time we see this bounce out, and then we see this knee-jerk reaction, which looked like strong buying, which was obviously just market makers or just off the news, knee-jerk reaction off the news, and we came out. So I exited my core position here, and after I'd see this, I kind of decided to try to start leaning off the long side. And my reason for this is the fact that we'd come back into this previous value, we come up, tested the mean, auction back down to the developing value area high and last week's value area low, and what I was anticipating on possibly happening was the market holding value and then a destination trade to the 106.50s, which would have lined up with last month's value area high, and that's where I was going to continue to sell this market down. But that just didn't happen, and I got it wrong. So like I said, I tried to short the open, and I was right, and I ended up just getting I ended up getting shaken out of my trade. And then I basically tried to long the market again into the overnight low, and into with a stop inside the previous day's range, and I got in a little bit earlier, and I managed to get like a very quick scale, and then I basically just got taken out on my core. The reason I got a quick scale was I was a little bit premature. I started to scale in. I mean, I don't always just go in with full size. Sometimes I scale into a position, and I started to scale in some here, and I just got some quick scales, and the market just teared down, and I just got out when we just see no support coming in here. So that was that. And after that happened, I mean, I just called it a day. I mean, what I should have done was just obviously find confidence and trade with the order flow, but I mean, it's just quite a difficult day. I mean, last 2 days have just been quite weird. I mean, new month and the end of last month, and I mean, I've just seen a ton of absorption today. I mean, if we look at Delta, this is 0 on Delta here, and the whole of this day we just pretty much traded with positive Delta, and we just couldn't trade below 0. And I see lots of passive buying activity on the footprint. I mean, if we look at the order flow all the way down here. I could just see people fading this all the way down. I mean, you can see all these 400, 500 prints, 400, 400 into the mean, and we just started to hold the mean, and then we just kept grinding down and down and down, and but all the way down I see passive buying and absorption, and finally we just see loads of passive buying coming here, and we see this plunge below the yesterday's low of day, and we see this huge passive buyer bought 415 contracts at 104.60, and then we see what happened yesterday. We just see that late end of day rally, and it wasn't as aggressive as yesterday, but you can clearly see here that there was business to be done, there was buying to be done, and we did fill in this low distribution. So if we sort of merge the past 2 days, you can see a nice orderly distribution forming here, and we have got a poor high now into the 106.13, so maybe there is still some more business to be done here. But I mean, if we look at the current distribution now, I mean, all we've been doing is just basically filling in some volume in this gap now. So until we see a real disconnect and a break of this trading range, then still lean to the long side. I mean, we came back and we tested this quarter's developing value area high, so I mean, I was expecting this to happen maybe later, but I mean, we come back and we've tested yesterday's lows and the bullish structure on the quarterly now, so who knows, maybe we'll just continue to find offer here and we'll continue to auction higher and clean up these prices. But if we do see a break of this 104.60s and we continue to grind down here, then it wouldn't surprise me to see a destination trade all the way down to like the 102s, and there are some lower levels that I'm not going to go into right now, but there is some great potential for some downside in this market if we can't find any offer here. So I mean, just some real volatility coming into this market, and that obviously always happens when we see the balanced two-way trade come back into the market, because you see the longer term buyers and sellers obviously voicing their opinion in the market. So you get obviously these big swings down, these big swings up, as the sellers and the buyers are just voicing their opinions from the higher time frames, as no one is really in control and there's no real directional conviction on the market. So very, very interesting to observe this type of behaviour, and it can be quite hard to trade because of the volatility, but obviously the references to trade locations, market structure, all is the same. And obviously what's fascinating here is as soon as we put this low in below yesterday's low, we see a reversion straight back to this week's mean. So this week obviously is clear two-way trade, there's no imbalance, and there is clear volatility in this market at the minute, and just have to see where we go from here now. So to see where we open tomorrow. But I mean, I got just a little bit caught off guard today, and in hindsight, obviously, like I said, I should have still been leaning off of the weekly mean. I should have continued to sell this and not looked to the long side. But I mean, it's just very touch and go. I mean, like we just said, I just got shaken out off the open into the news with the way that everything was playing out around the dynamic sort of structure with the moving averages and stuff. So I mean, after we sort of saw this, we bounced into the 5 exponential and a 10, and we just see this responsive buying. And I mean, we could easily have saw a test of the bracket high, which is into the 106.50s. So that was on my next destination, was to the 106.50s. I mean, if we look at this here, and on the 240-minute bars, I mean, this was a spike yesterday, and this was the open today, and we literally just auctioned higher into the open. Then the next 240-minute bar came out, and we just sold all the way back down again. But like I said, look, we see one time frame and on the 240-minute bars, and there was nothing to stop us breaking this 106.20s and auctioning into the highs of the sort of 106.50s. But it just didn't happen, and sellers came in, and we see a new low, and still not closed this gap, which is also fascinating. We still have an open gap here. Obviously the high was in 104.52s, and today's low is at 106.61s, I believe. Let me just double. 106.60s. I mean, it's just an 8-tick gap, but I mean, it's still open regardless. But anyway, we'll see what happens here. We have some, again, we still have a nice excess down here, and so we're still looking for reversions back to the mean, which is the 105.55s at the minute, until we see a real disconnect or we continue to find offer above the point of control. Anyway, I'm just going to quickly touch base here on the S&P 500 as well. I mean, just real animal market at the minute, and we see a new year high put in today, and we've seen this sort of first test of this target area. I mean, there's nothing to really work with on this market at the minute, so I've just basically got some fib extensions in place. So we've obviously got the low, the high, then we got the retracement back to the 50%, and then we gradually auctioned up, broke higher, and then we're just basically hitting these target areas now. So the target area is in between these areas here, which is going to this is going to be the target area. It's just the expansion target on this. And today we hit that first plus 50%, and yeah, just some interesting stuff going on here. I mean, there was some potential bracketing coming into play here, but we just couldn't trade below the 1.5 standard deviation on the quarterly, and you can clearly see here we just continue to react here, and we've seen this last push higher. So some divergence on the MCAD. I mean, it's not something that I track all the time, but it's just something to observe the cycles. But some divergence up here, so we'll see what happens here. Maybe we're going to come back and test 1923s, or maybe we're going to continue just to be a machine, and the train's going to continue to go higher. Just crazy market at the minute, the S&P, just all to the buy side. Anyway, I'll leave it at that, and I'll catch you all tomorrow. Take care and goodbye.